Castile is developing the Rover 1 project in the rich Tennant Creek area of the Northern Territory in Australia. We'll be producing downstream end user precious and critical minerals. So that'll be gold, 99% copper, 99% cobalt, and a 96.5% magnetite product. We had some great results from our pre-feasibility study, which we completed in December 22. We've got a pre-tax NPV of 450 million and an IRR of 46%. Very strong financials. We've got total revenues over the existing 8 years of the project of $2 billion. And obviously we expect to add years to that mine life as we drill, as we move down the structure. We've got a pre-tax cash flow of $1 billion. And I guess the simple payback for this project is 2.5 years. So very strong financials. 2 more discoveries on existing tenements that form the basis of our hub and spoke strategy. So once we get the Rover 1 infrastructure and processing facilities developed, we can then feed these other projects that we have nearby into that processing infrastructure. I think what makes Castile a compelling investment and really is our differentiator is that the true value of our company is that we adopted this downstream critical mineral end user product strategy very early in the development phase of Rover 1. The federal government and the rest of the resources industry in Australia are sort of catching up now and following on and getting behind this downstream critical minerals opportunity that the country has to shore up domestic supply of these metals as we move into that net zero target transition and energy transition that we're moving into. So our view very early on in the piece was that Australia just can no longer afford to be this dig and deliver, selling untreated ores to offshore smelters at wholesale prices. The federal government also currently has their critical list under review, and we think copper, which is a very big exposure of this company, will be moved onto that Australian critical minerals list. Very busy 6 months coming up. Initially, we're running a seismic survey using cutting-edge new technology, which is significantly more accurate than previous methods. So I'll try to simplify what that means. So we will be able to measure the depth to the basement of these structures that we're looking at and the location of high density material. Now, Rover 1 is an IOCG structure. So that is exactly what we are looking for, these high densities and understanding where they sit in relation to the deposit and to the cover that they are under. So what we're going to do is run a control survey over our fully drilled out Rover 1 project to test the results against that known structure where we have all the details and the data. And then we're going to move the survey to our greenfield pathfinder exploration targets in the southern sections of our tenements. And so we'll be able to use that knowledge that we have, that this seismic survey is able to actually see where and how these deposits sit. And then we will drill that Pathfinder 35 structure that we found last year. And also what that will mean is it's co-funded by the Northern Territory government, both the seismic survey and the drilling of the new hole. So in case that wasn't enough, we've also pegged some ground in WA that we had our eye on for some time. We then went back and had a look through a very thorough search of all the publicly available data for those structures. Turns out in 2010, 2011, there were over 9,000 soil geochemistry samples taken, and there were abundant anomalies at surface on that ground in lithium, niobium, and rare earth elements. So as soon as we get our heritage agreements in place, which we're expecting in the near term, we'll be on the ground sampling in those areas. That's all coming up for us in the next 3 to 6 months.